Okay, yeah, let's go ahead and get started here. Salams, everyone. I wanted to welcome all of you to a very exciting webinar we have in store for you this evening, where we will be putting a spotlight on our portfolio management here at ShariaPortfolio Canada. Thank you all for taking time out of your evening or afternoon, wherever you are, to come and interact with us. And yeah, without further ado, let's get started. Just a quick disclaimer here. Anything said or kind of presented on this webinar is for educational purposes only. It is not to be taken as financial advice. Again, educational purposes only. If you do want to speak, more about your personal situation, please reach out to one of us directly, and we'd be happy to help to have a more personalized conversation. And throughout the webinar, if you have any questions or concerns, you can drop them in the chat or the Q&A box for us, and we'll get to them when we see them, or we will have a Q&A, time for a Q&A at the end of this webinar as well. So as we get started, I just want to give a brief introduction to our team members who will be presenting with you today. My name is Ali Ladak. I'm a financial advisor with the firm. I will just be acting as the moderator. So starting with our CEO, Brother Naushad Virji, who many of you know. He is the chairman of the SP Group of Companies, which he founded back in 2003 in the USA. He's also one of the portfolio managers for the SP Funds line of Sharia compliant ETFs, which many of you are maybe familiar with. And prior to launching ShariaPortfolio, Naushad managed a hedge fund. Sister Sabinah Amershi, who serves as our vice president at ShariaPortfolio Canada. She joined the firm back in 2015 and quickly rose the ranks from client services manager to managing our team of associates to now being the vice president. Zeeshan Janmohamed is one of our financial advisors here at the firm as well. He spent most of his career in the capital markets and wealth management space, supporting both institutional and retail clients. And he has a keen interest in the industry, with a desire to help others and assist individuals and families, along with businesses as well, in their pursuit of a greater financial goals. He joined ShariaPortfolio after spending a couple of years at RBC Dominion Securities. And last but not least, Brother Irfan Chaudhry, our portfolio manager here at ShariaPortfolio Canada. He's had a progressive career and to date as an investment manager, and has been listed among the world's top Wall Street economists and experts and opinion leaders by the Wall Street Economist Institute in 2011. Previously, he served as an investment strategist at Emirates National Bank Asset Management, a portfolio management firm for the Med Family Trust, and a portfolio manager for the City of Regina Pension Fund. He now acts as the Chief Compliance Officer and Portfolio Manager for ShariaPortfolio Canada, and he leads all regulatory compliance, portfolio-related research, risk management, fund management, portfolio strategy, asset allocation strategy, trading, and investment banking at the firm. And I'll pass it on to Sister Sabinah, who will be talking about the Compliance and Investment Committee at the firm.
Assalamu alaikum, everyone. So I'll be talking about compliance today. And ShariaPortfolio Canada is registered in the provinces of British Columbia, Ontario, Alberta, and Quebec. And we are governed by the OSC, which is the Ontario Securities Commission. Our firm must ensure that we are continuously meeting compliance guidelines for each of those provinces, as well as the OSC's requirements. So we do have an investment committee, and we have regular meetings to manage our portfolio management and to ensure that the compliance guidelines are being met. And as well as managing our compliance in-house, we do use a leading compliance firm who provides additional guidance and expertise where needed. So I'm just going to go over some of the discussion points for our investment committee. So we have regular meetings to discuss portfolio management. We review the current holdings in our models. We review the asset allocations in our models. We have discussions on changes to existing models. We also discuss any updates that need to be made to our models, and also, updates to our model spreadsheets. We have discussions on performance targets and also discussions on rebalancing as well. In order to maintain Sharia compliance, there are certain criteria that need to be met in regards to the models. Zeeshan will be going over those in more detail later. And then Naushad will also be speaking about our investment process and stock selection as well.
Assalamu alaikum, everyone, and thank you, Ali, for the kind introduction. I'll just be giving you a quick overview on the programs that we do offer, the investment solutions that we do cater for, and just a little bit about how we actually ensure our portfolios are Sharia compliant for our clients. Our main goal is to ensure that every household has access to being able to invest without compromising their values. And we make sure Sharia compliant investing is accessible to everyone. That's our mission statement because everyone should have access to it, no matter the account size. So we have two main programs that we offer. The first one is the passive program. This one is catered to individuals or families across the range of account sizes. So be it $5,000, $15,000, or $20,000. This allows you to get exposure to start investing and make sure you do have a Sharia compliant portfolio. And we cater to everyone. One of the other benefits of the passive program is it's very economical in nature. There's less turnover in your accounts because it's a fund model, but that allows you to take advantage of less fees, less trading fees, and allows you to kind of still grow your account until you're at a stage where you may want to move into the active program. Now, the active program, the benefits of this are quite manifold. One of them is the focus on individual stock positions. So we use what is known as a core satellite approach, with Brother Naushad will speak about a little further on. But in the active program, you get a portfolio which is curated and tailored, customized for you. It's important to note that every client, every household has a different financial situation, different goals, different aspirations. So your plan, your portfolio needs to be customized and tailored for yourself. The active program allows us to do that for you with the focus on individual stock positions, plus personalized portfolios. And one of the big aspects of this is also tax loss harvesting. This is more catered towards non-registered accounts where you want to be able to take advantage of making your portfolio as tax efficient as possible. That is something that we provide a service to our clients who are in the active program. The other benefit is tactical maneuvering. So we, as an investment committee, like to take advantage of opportunities that are offered in the market at specific times. And we're able to move around and maneuver your portfolio based on opportunities that are available to us. Now, this is the most important part: retirement and financial planning. Investments, building a portfolio, all of this is a means to you achieving your goals. And your goals are supposed to be aligned with your retirement and financial plan. As part of our active program, we actually offer our clients an in-depth retirement and financial plan. This is to ensure that you are tax efficient, you have an estate plan, you have a will, and you're able to retire the way you actually want to retire. Right? So at the end of the day, it's all about reaching your goals. Investments and your portfolio is a means to reaching that goal. Now, our active program, like I mentioned, we do work with our clients to make sure we have an in-depth retirement and financial plan for you, which we constantly update and are on top of. If you move to the next slide, please. Now, we kind of touched on this before, but if you look on the bottom, there's portfolio models, right? Like I said, every client is in a different situation, different goals, different aspirations, different levels of risk that they can tolerate as well. And we cater to all clients, be it clients who are on the low risk end of the spectrum or on the high aggressive end of the spectrum. And we have on the low end of the risk spectrum something known as a sukuk model. Now, sukuks are just an alternative to the fixed income asset class, which is non-compliant, for example, bonds, GICs. We have the low risk products available in our sukuk model. As you move up to the aggressive model, you're more exposed to individual stock positions or on the equity side of the asset class. On the middle end of the spectrum, it's kind of a mix of both. Now, where you are on this would depend on your situation, your goals, your risk tolerance, your liquidity needs, and we ensure that we go through all of these in depth with you to ensure that you are aligned with your portfolio. And we offer all sorts of accounts. So everything that is usually available, RSPs, TFSAs. But two things that I really want to kind of point out here is that we have a lot of clients that we work with who have corporate accounts. So you may be a business owner and you may need some business planning done for yourself, right? So you would have a corporation which you may have different needs for. We work with you to ensure that is also aligned with your financial and retirement plan. You may be a medical practitioner, a medical professional with a corporation as well. Or you may just be another professional with your own corporation. We work with you. The FHSA is a new account, which we have had a webinar discussing that before. We also offer that. And one thing that we also do offer is the RDSP. For anyone who is interested, please do get in touch with us. We can discuss that further with you. Next slide, please. Now, we are Sharia Portfolio Canada, so you're probably wondering, how do we actually make sure our portfolios are Sharia compliant? Well, our advisory board is IFAB, which uses AOFI guidelines for Sharia compliant investments. So we manage all our portfolios for our clients in accordance with the rules and guidelines that are set out by AOFI. Now, AOFI is made up of a Shura council with respected scholars from all around the world. So what we do is they have set guidelines and we use those guidelines to ensure that we are within the framework of those guidelines, in turn making your portfolio Sharia compliant. Next slide, please. Now, step one, actually ensuring this is to make sure that your portfolio is holding companies or has exposure to companies that have compliant income sources. We avoid companies that are in industries like the ones you see on the screen above, where, let's say, their main line of business is gambling, tobacco, music, highly leveraged businesses, or interest earning. That's step one of us determining if a company is actually compliant to move into the next stage of our screening or not. Let's move on to the next slide, please. So first thing, you look at the industry. Okay, is this type of company actually compliant or not compliant? Let's say the type of company and their business operations, their main form of business is compliant. Okay, what's next? Well, in the investment industry, there's many different asset classes. So you've got stocks, you've got fixed income. Within fixed income, you've got different products like GICs, bonds, sukuks. And then you also have mutual funds, ETFs, you have Islamic ETFs. You've got other asset classes like preferred shares, derivatives. Now, we have to look at all of these and determine which of these are actually compliant as well. So products like preferred shares, some fixed income products like bonds, GICs, structured notes, most of these are not compliant. At the same time, derivatives like options, swaps, forwards, these are not compliant as well. So we make sure that we don't include these in our portfolios. What we do include are products that are compliant, for example, Sharia compliant companies or their stocks, sukuks, mutual funds that are compliant, and ETFs that are compliant. Now, we are proud to say that we actually have our own ETFs trading on the market, which are 100% Sharia compliant. Next slide, please. So we look at what type of product is it, what industry is the business in, and then we look at three main. We have a much more in-depth screening process, but there are three main ratios that we actually look at in a company to determine then if it is actually compliant for us to invest in. The first one is we make sure that the company's interest-bearing debt over a 12-month average should be less than 30% of the company's market cap. Market cap is basically, for those who may not know what market capitalization is, it's just the number of shares that the company has that are being traded multiplied by the value of the shares. It's basically the size of the company. So interest-bearing debt of the company should be less than 30% of its market cap. Now, one of the reasons some debt is allowed, which many of you are probably wondering, is that not all debt is non-compliant. For example, you may have a business where in your operations, you actually offer a net 30 terms to a supplier or with a supplier. You have a net 30 terms contract. That means during the 30 days, you're actually not paying or charging any interest. Now that is short-term debt. Typically, companies that have less than 30% of their market cap in debt are very short-term debt. So that's one of the examples of why, like, you may have companies that do have some debt that are technically compliant that we do invest in. But just to reiterate it, interest-bearing debt of the company should be less than 30% of the market cap of the company. Second, companies hold cash, right? The amount of cash that a company holds should not be more than 30% of the assets. Because generally, when a company is holding a lot of cash, they're earning a lot of interest on it. So when it comes to Sharia compliance, it's not just about how much interest you're paying, but also how much interest you're earning. So we need to make sure that the company is compliant in this regard. Lastly, the other main ratio that we look at is the percentage of income that is generated from non-compliant sources. So you may have a company that is in the correct industry, is earning majority of its income from compliant sources, it's in the correct asset class, it meets the first two financial ratios, but it may have a subsidiary or a small part of its company that is generating income from non-compliant sources. No more than 5% of its income should be from non-compliant sources. If it is more than 5%, we would deem that non-compliant. If it is less than 5%, we would still be able to invest in that company, and if needed, we would purify our clients' portfolios. I'm sure you'll have questions with regards to ratios, so do put them in the chat box if you do need to. With that, I will pass it on to Brother Naushad, who will talk about sector allocation, our investment process, as well as the core satellite approach, which I touched upon earlier. Thank you.
All right, thanks, Zeeshan. And thank you, everyone. Assalamu alaikum. I'm Naushad Virji, the CEO of ShariaPortfolio Canada, and I'm also the founder of ShariaPortfolio. I want to thank everyone that is attending today. This is actually a pretty important webinar. So those of you who took the time to join, thank you for being here. The reason I say it's important is because one of the criteria that you have to look at whenever you're thinking about investing or working with any financial advisory firm like us is, what are these people going to do with my money? You know, it's your hard-earned money. It's money you've saved up for a long time, and you should understand what's going to happen to it. And that's what this webinar is all about. You know, what happens to your money? Some of the ways that we invest, you know, we try to keep it very simple, and we're happy to explain how it works. If this is a process that really makes sense to you, then that's how you know this is something you should consider. This is how you consider our firm. And that goes with any other advisor, you know, whoever you're talking to, it's your hard-earned money. So please make sure you understand what's going on. You have every right to ask. In our case, the way we manage our clients' money is, first and foremost, we utilize what's called a core satellite approach. Zeeshan touched on that earlier. What that means is we take a portion of the portfolio that we're investing and we put it in a core, which is something that's pretty well diversified, which tends to be a little bit safer because it's diversified, and it's typically something that's indexed to the market. Now, what that means is, you know, if you've heard of the S&P 500, everyone's talking about, can we beat the S&P 500? You know, what's the S&P 500 doing and how are we doing? That's kind of how a lot of people gauge their performance and their returns. So our view is that if we just put the core of our portfolio primarily in the S&P 500, then it's going to help us track the market returns. So that's the core of our portfolio. Now, how do we make sure that's Sharia compliant? Well, we utilize an SP funds ETF called SPUS, which basically focuses on Sharia compliant S&P 500 stocks. So that's the core of our portfolio, and then we're building around that. So when we say core satellite, the core is basically that core that's in the S&P, as well as maybe a little bit international or in Sukuk or other areas. And then the satellite are the individual stocks that we're buying to complement the core. And our intention is to try to achieve your financial goals with that. So if you're someone who's very aggressive, trying to beat the market, the core helps us kind of stay with the market. And then the satellites, the individual stocks that we put into the portfolios, inshallah, will help us outperform. So that's the approach that we use. And that leads us to kind of the asset allocation. So if you look on the top of this slide, we start off with the asset allocation. So you can see on the right side of the screen, we have aggressive, growth, moderate, income, and conservative. Those are the primary strategies that we employ. So when you see the asset allocation, equity is basically stocks, right? So in aggressive, we have 80 to 95% individual stocks or equity, which makes sense. If you're aggressive, you're going to be more focused on equity or stocks. If we go to the other end of the spectrum, conservative, now our equity is only 10 to 40%. So that's why conservative is designed to have a little bit less volatility by having less exposure to equity. The next line item is fixed income. Now, obviously, we're not investing in riba-based products, so we're not investing in bonds. So what we do invest in instead is Sukuk. We have some other presentations that are really focused on Sukuk, what Sukuk is. If you're interested or want more information about that, please check out the videos or call one of our financial advisors. They'll explain it further. But as far as we're concerned, a Sukuk is an alternative to conventional fixed income. So when you see fixed income here, don't worry, there's no riba happening. We're investing in Sukuk. So in our aggressive model, the maximum Sukuk we're going to have is 10%. And in our conservative, which is all the way on the other side here, the maximum is 80%. So you can see the difference, and you can also kind of get the feeling of what's going to have an impact on your portfolio, whether you're an aggressive or conservative or somewhere in between. So these allocations are effectively how you're being allocated as far as the type of investments. So equity, again, is stocks. Fixed income is Sukuk. Real estate is real estate. So we do invest in some Sharia compliant real estate, and then cash. So sometimes people ask, well, why do you have up to 6% cash? Aren't I paying you to invest my entire portfolio? Well, that's a good question, but cash is also something that we can use in a tactical decision making. So for example, when the markets are down, you'll typically see that we're in a lot less cash. Why? Because we want to invest when the markets are on sale. So when the markets have come down, that's when we're going to really want to be invested more. When the markets seem high, and of course, this is our personal opinion or our portfolio manager's opinions, then we might move a little bit more to cash because we're worried there might be a drop in the market or there might be some volatility. So that's why we might vary between 2 to 6%. Now, further to the sector allocation, once the decision is made that we're going to be either in stocks, stocks or Sukuk or real estate, then the question becomes, where does this money go? Which industries and which stocks are we going to buy? So taking a top-down approach, we can kind of see that, first of all, SPUS, that's our S&P 500, our Sharia compliant S&P 500. You can see the column here that says SPUS and the different sectors that we're invested in. So you can see consumer defensive, healthcare, utilities, communication, etc. These are all different industries, right? So when we look at SPUS, you can see that 4.4% of it is in consumer defensive. Now we put SPY here. SPY is basically the conventional S&P 500. Now, obviously, we don't follow that 100% because it's not Sharia compliant, but I put it here just for comparison purposes. So the Sharia compliant version of the S&P 500 is 4.4% in consumer defensive. Meanwhile, the regular S&P 500 is 5.9%. Now, if you look at how our aggressive, growth, moderate, etc., you can see we're a little bit higher than both SPUS and SPY. So what that means is we're being a little bit more defensive in general. So that's a good thing when you look at how the markets have performed the last 10 days. We've seen a lot of volatility. We've seen a lot of fluctuations. We've seen a lot of technology stocks in particular come down. So being more defensive is a good thing in this market. When our portfolio managers feel like, okay, we've reached maybe a bottom or maybe technology is about to make a comeback, then you'll see the opposite happen and you'll see consumer defensive drop. Now, in the same way, you can see all of the different sectors, like healthcare, for example, is 14.7%. We're a little bit uninvested or less invested in healthcare. So our aggressive is at 7.9%. Our conservative models, or I should say our growth and moderate, are a little bit higher. You can see moderate is at 11%. So healthcare was one of the more underperforming sectors last year. And, this year, if you're looking for potentially undervalued stocks, that might be an area that could be of interest. So healthcare is currently at 7.9. Maybe that'll go up a little bit, but it's always going to be within 10% of SPUS. We don't want to stray too far from the benchmark. Utilities aren't any Sharia compliant utilities, so we don't have anything in that space. Communication, we used to have a lot of communication stocks like Google. And more recently, we bought Twilio. Communication is an area that could be of interest. We're a little bit underinvested in that space, but that's an area that we're taking a look at a little bit more closely. But you can get the idea from looking at this of the different sectors that we're looking at. Technology is always a big one in the Sharia space. So the Sharia S&P 500 is 46% technology. We're at 41.3 in aggressive. So we're still a little bit less than the benchmark. But again, in this market, that's probably a good thing, given that technology has been so volatile lately. So what you're looking at in front of you here is kind of the game plan for us as a investment committee. And the good thing is you have a committee here that's looking at all of this. So a group of people who are all reviewing this information and making decisions on what to do. They say 2 heads are better than 1. Here we have 4 heads better than 1, and all working together to make sure that your hard-earned money is invested appropriately for you. So this is one of the ways that we do it. So this is really how we focus on, do we need more healthcare stocks? Do we need more consumer defensive? Do we need more industrials? The answers to those questions become a little bit more obvious when you're looking at the sector allocation as we see here. So this kind of helps us decide where we want to focus our attention. Now, as far as the individual stocks themselves, that's where our analysts come in, and they have meetings very regularly where they'll have these discussions. Usually we'll have one of our analysts do a more in-depth dive into a particular stock that's in one of the sectors that we want to pick up stocks in. And then we'll all review that collectively, and our portfolio managers will make a decision that, okay, we do want this stock and this is the percentage we want, but the sector allocation is a very big part of that. So that's how this works. If we can go to the next slide, you can kind of see this aggressive sector allocation in a pie chart. This looks a little bit more, I guess another way to look at the same thing. You may have seen this in some of your reports, or if you've been with other firms, this is a very common graphic. So this kind of shows how the allocations are currently. This is something that's always changing. So based on market conditions, the economy, the expectations of our portfolio managers, we look at all of this together, and then we make a decision. And every month this might change a little bit. If you want more information on the sector allocations, please talk to one of our financial advisors, and they'll be happy to review this with you. When you're doing a portfolio review with your advisor or with one of the portfolio managers, feel free to ask any questions about this. Again, this is your hard-earned money, and this is how we allocate it. I can talk all day long about the specific stock selections. That's a whole other discussion, but this, hopefully I've achieved kind of a overview of the models, the allocations, the sector allocations in particular. So this kind of gives you an idea, and any of us on this panel, or even any of the financial advisors at our firm, will be happy to go into more detail with any of you. So that's the quick rundown from me on the sector allocations. I'll pass it back to, I guess, Irfan is next. So he'll go into some of the specific securities and economic discussions. You can take it from here, Irfan.
Thank you very much, Naushad. And Welcome, everyone. Assalamu alaikum. And my name is Irfan, and part of investment committee and a portfolio manager. And I look at these stocks, individual stocks, along with the rest of the committee as well. So thought process I had as Naushad went over the stock sector allocation. So what I wanted to do that what's the thought process which goes into selecting the actual stocks and having a views on the sector allocation when we select the stocks. Obviously, it's a process which is top down and bottom up. Basically, top down flows from the macro themes, and this is the global macro economic themes, which includes obviously today, which I will briefly gloss over the global GDP growth in next year next to that, and then coming 5-6 years, and then the current environment on how that affects our themes and stock selection and the sector selection. As well, another angle to look at that is the interest rate cycle, which is all of us, we are in the middle of that, of interest rate cycle and the inflation regime. So a little bit discussion on that. I will have maybe a small sliver on the fiscal policy, US fiscal policy as well, and global macroeconomic policy, and how does that affects the coloring on how which sector and which stocks we need to. And I'll go over a few stocks which we have in the portfolio to represent those themes. So essentially, like global GDP growth has been very robust in 2024. 2024 expectation. This is a conference board chart, and what it does say is the U.S. Growth in 2024 is expected to remain pretty high from historic standards. It's around expected to be around 2.4%. Still, obviously, some of the countries like China and India and emerging Africa and Asia, those countries are going to do better than US and the developed world, but US is going to do very well in 2024. Part of the reason is consumption is expected to be stay robust, and there is a full employment there, which has a flip side on the inflation side, which is because of wage pressures, and inflation remains sticky because of the wage pressures. But overall, the economy is expected to do well in 2024. This is a tabular form, more granular, 2024 and 2025. As you can see, as the advanced economies and the US itself, actually, the GDP growth is slowing down in 2025. Whereas emerging market economies, actually, they would stay higher in 2025 and beyond, 5 years beyond that. Next slide, please. And so essentially, what does it say is this is 2026 to 35, 10 years. At 10 years' time, most of the, it's a gravitation away from the developed world towards the developing world. Just like a decade ago, there was a decade of emerging market economies. This time again, there was 10 years when developed markets, they were better off compared to emerging markets. So essentially, I'm conflating here the stock markets with the economies. So they are quite closely correlated. So just bear with me on that. So we expect that this conference board chart is right, and where that growth is coming from is basically this global growth is coming from total factor of productivity growth, which is essentially something which adds to the improves the work process, basically automation, for example, or artificial intelligence, or training of people. This is the total factor of productivity growth. In the last 3-4 years, that effect has been negative, but as you see, 2025 to 2036, actually, this will have an increasing impact on the total, which potentially says that, again, how that theme relates to the stock themes and stock selection themes, that our focus, we will be closely watching technology, artificial intelligence, automation, cloud, and mediums of exchange. There are some of these names: genetic research, genomic research, biotechnology. So essentially, all these themes are the dominant themes for the next 10 years. Emerging markets, obviously, as I stated earlier, we expect them to do well in the coming decade. And still, we expect them to be 61% of the global GDP by 2035. In an earlier Goldman Sachs report, was like they were counting as among the top 10 economies of the world, 6 were currently emerging market economies. What does it say? Next slide, please. Generally, commodity stocks are last cycle, commodity super cycle was really correlated with emerging markets in the last decade, when emerging markets were really outperforming developed markets, because there were a lot of consumption of commodities like steel and iron and coal, copper. So prices of all these commodities really increased a lot till 2008. And then obviously after the great financial crisis, there was a decade where developed markets in a zero interest rate regime, they were doing better. So this time also the commodities sectors are, we expect them to, in the next 7-10 years, that they are going to do well. These are the strategic thoughts, like long-term thoughts, where long-term positions of portfolios and the stocks are underlying them. In the short term, tactically, obviously, there's an interest rate cycle here in the US and an inflation regime, which is appears to be sticky. We think that valuations-wise, also the developed economies in the US, go to the next slide, please. There was, I'd say, 2 or 3 slides below. Go down. Go down. Yeah, this is a chart which shows how far the valuations are from the average. This is 10 to 90% percentile. So essentially, you can think that as a boundary or a border around the median, and the valuations for developed markets is pretty high, substantially high, whereas the emerging markets and Japan's valuation, they're pretty low compared to historical standards. So essentially, what does that say is that valuation-wise, higher valuation stocks in the US probably would be risky. Although I have said earlier that technology, we believe that technology is a good strategic allocation, but obviously there are risks around that, because the risks for the valuation stems from volatility in the rates, because there is an unease about inflation. In the last month or so, for example, interest rates have risen from 4%, a 10-year rate, have gone up to 4.6% right now. And that was one of the reasons that, higher valuation stocks in technology sector, which is average price to earning ratios are higher than the market, they took a disproportionate share of this sell-off, basically. So, but on the other side, earnings growth for these companies are expected to be higher, and earnings growth potentially may override any compression and the valuations to the normality. So essentially, I think that's the thought process here in regards to the developed economies, that we need to be very selective on the stocks where the growth profile is higher, and valuations, if you can look at the valuations are reasonable. So these were some of the thoughts here in regards to, I want to have a brief here, a little bit brief on the stocks, because I want to cover something on the stock selection and the stocks in the portfolio as well. For example, we look at, we have a discipline for purchasing the stocks. That discipline, we follow target price discipline sometimes. We also look at the technicals when to time the purchases, to sell the shares. We follow a target price sell discipline, or the fundamentals improving or deterioration of the fundamentals, that discipline as well. We also look at the opportunity cost. Sometimes we have a great stock in the portfolio, but we look at a certain stock which is even better. Generally, the stocks we select to play these themes which I mentioned, like, for example, total factor of productivity growth, consumption in the developed markets, and earnings growth, and then technology and IT side. These stocks which we select them is they are thoroughly researched here, and as Noah has said, that they are presented in investment committee setting, and we go over and stress test the assumptions on the basis of which we think the stock is going to outperform. Just to give you one example, Tesla, for example, we had this discussion last year, the third quarter, and we felt there was industry-related competition heating up in that sector. And also on the consumer discretionary side, there was some headwinds there because at the end of the day, it's a high ticket item and it falls in the consumer discretionary side. So also net present, like the most of the growth which Tesla was, and the analysts were attributing to Tesla, was coming from China, and Chinese market itself was becoming very competitive in electric vehicles, like likes of Li Auto, Baidu. Baidu is coming up, it's partnering with Mercedes-Benz and putting up a new line of luxury electric vehicles. Then obviously Xpeng, a lot of names there. So that actually we felt that may force and create headwinds for industry overall, and Tesla being the market leader and industry leader has most to lose in that. So we reduced the overweights on that in Tesla, and that's a decision which was based on the fundamentals, assessment of the fundamentals of the industry and the company itself. On the other front, actually, we select some names which are, for example, put to play, provide a hedge to the portfolio against the geopolitical risks, and also the commodity names in general we think is a strategic move as well, but tactically they also provide a hedge against the geopolitical risk. And overweight in energy, we were overweight in energy, as Naushad showed you guys, up I think 4% higher than SPUS, and that has played very well during this Middle Eastern crisis, and when a risk premium was tagged onto the oil price, that translated a bonanza for our energy holdings. That's kind of like, I think, rundown. I've run down on two, I've given you guys two different examples. There are many other examples which I can give. There are some examples, not all I can ensure, what I can tell you guys, that not all the themes we take, or all the stocks we pick, not 100% of them will play. Some of them takes longer time to play. Some of them do not play at all. But in those cases, we always go back and look at those names and reassess the situation. And if needed, we need to get out of those positions. We need to get out of those positions. This is some of the names I put here. This was a couple of days old. CleanSpark is one of those names which is a top performer in the portfolio right now, in the aggressive portfolio. It's up year to date almost 55%. Then a few days ago, we had it last week. I think we made some changes as well. We added Novo Nordisk, which is a very good healthcare name, and the stock has done very well. I think it has room to go even further. Adobe, another name which has done well in the last year, and I think it's a leader in the infographics industry. So essentially, that name is there as well. It's a few names I can point out which has not played up to the expectations, like Shopify, for example. There could be some names like some AI names which have not played up in the year to date, NVIDIA and TSMC. But I think we have still a confidence in overall story in the AI and the U.S. government subsidies, which are providing to TSMC to set up plants in Nevada, which is going to be very helpful in this deglobalization, because deglobalization is another theme which is actually playing into for the stocks like the TSMC, Taiwan Semiconductors, and ASML, NVIDIA. So I just leave it at that, and my purpose was to walk you guys through our thought process here, stock and sector selection, and I will welcome any questions, whether earlier part of the presentation or my part of presentation. So our team is ready to do that.
Yeah,
There were some questions that came through during our presentation, so maybe I can just answer one of those that came in that I think was directed to my part of the conversation. Somebody was asking about what is SPUS and SPY. So SPY is basically a collection of the largest companies in the United States, the 500 largest. And this is a very common or typical index that people follow to see how the markets are doing. Now, SPY is not a Sharia compliant index, so that's where SPUS comes in. SPUS is an ETF that basically takes everything that's in the S&P 500 and removes all the haram companies from the list. So it's a Sharia compliant version of the largest companies in the US. So when I was referencing those two earlier, I was doing kind of a comparison of what their sector allocations look like. And it's something we kind of keep an eye on. We just kind of look at how both of them are doing. And it's something that kind of really helps see what's, why there might be a difference in the two of them. Historically, SPUS outperforms SPY. Looking at any chart on any platform, you'll be able to see what that looks like. But typically SPUS has companies with less debt, so that's something that's really helped. It also has a tilt towards technology, so looking at the two, you can easily kind of see what the difference is between them. Somebody else asked a question about the spreads for the ETFs. Irfan, would you like to address that? They were asking why our spreads are higher on the ETFs.
No, I thank you very much, Naushad, and a great explanation for SPUS and SPY. Spreads, I know certain days or spreads have, for especially the new ETFs, SPTE and SPWO have been higher, and sometimes it's been brought to our attention as well. Generally, we watch the trading pretty closely, and if needed, we can address the situation. Like as Naushad mentioned in the response, that these are new ETFs, and sometimes because the trading is slightly lower as the time goes by, like for example, I think the latter half of this year, we expect the trading to pick up in both these new ETFs, SPTE and SPWO, and that will help tighten the spreads. And in the meanwhile, if there is a big order, you obviously are welcome to approach our team, and we will be ready to help you with a market maker to take other side of the position if there's a bigger order to control the spreads sometimes. I think SPRE and SPSK, I think there's a healthy trading there in both these names, and whenever I've seen the spreads below 10 points. If it is higher than 10 points in certain days, I would encourage you to bring it to knowledge, and we will try to address if there's any dislocation in the market.
All right. There was another question about how ShariaPortfolio Canada is different from other Sharia compliant vendors. One of the things that I like to point out about that is that we've been doing this for a really long time. We started in 2003. We collectively between us and our affiliates in the US and SP funds and all of our companies, we manage about 1.1 billion US dollars. So we are focused on this. But one of the things that really makes us different, in my opinion, is that we're one of the very, very few Muslim-owned and operated Sharia-compliant firms out there. That's so for us, it's not just business, it's also personal. There are things that we do that I don't think a lot of other firms will. For example, with the crisis that we've seen recently, I don't think I'm supposed to talk about politics as much, but I'm just going to quickly mention that we divest from genocide in general. It's something that we just, don't like, and we remove stocks that are involved in those kinds of activities. And so you'll see that with our ETFs, and you'll see that with our portfolios as well. So that's, I think, a very important distinction. Like I said, for us, it's not just business, it's also personal. I think that a lot of people who are coming to us now, have seen us for decades. We've been doing this for decades. We have a team collectively of about 40 or so people in North America. And this is our focus. This is all we do. This is our bread and butter, Sharia compliant investing. There are other firms who do Sharia compliance on the side, where their main business is not halal investing. So my personal opinion is, you could go to a restaurant that has halal steaks, but also sells non-halal steaks or non-halal chicken. My personal view is I would rather go to a halal restaurant that's 100% halal, Zabia, and that's my personal opinion. Zeeshan, would you like to elaborate or comment on this question?
Sure. Thank you, Naushad, for the explanation. We have a question. Any thoughts on lowering the threshold for actively managed portfolios, and what is the current threshold? Yeah, so we do have a current threshold for actively managed portfolios, which is $100,000 at the minimum. At the moment, the reason that we do have the $100,000 threshold is for the sake of our clients, because we do not want to incur costs on your portfolio which are unnecessary. At the same time, with a smaller portfolio, you are able to get the diversification you need through our funds, but with the larger portfolio, you are able to hold individual stock positions to your benefit with that additional alpha that's generated on your portfolio. But because of the turnover in actively managed portfolios, it isn't very economical to have clients in that with a much smaller portfolio. That's one of the main reasons that we have a threshold. But at the moment, we do not have plans to lower that threshold. But like I mentioned earlier, right? Just because you don't meet a threshold does not mean that you're not able to be taken care of. We take care of everybody, and even if you have a smaller account size, you still can get exposure to Sharia compliant investment and our brilliant portfolios, which generate returns that are in line with the index as well.
I just wanted to go back to the previous question and differentiating Sharia portfolio from other Sharia portfolio firms, in which Naushad actually was really quite a detailed answer from him. Just to add to that is that we are, I think, the only dedicated Sharia compliant firm which is registered with the securities commissions here. It's not only Ontario, but also Alberta Securities Commission and Quebec Securities Commission, as well as I think Manitoba. We are registered in Alberta. We are registered in Alberta as well, and we maintain a very high standard of compliance of the regulations. And you can really, we are investing according to the values, according to the values of our brothers Muslims, but also your money is being in a safe hands, and it's fully kind of like it's something which is regulated. The firm is regulated, and for the last 4 years, and there are no issues in regards to that as well. You probably can see some Sharia compliant firms here because I know a few of them, but they are some of them are not registered, or some of them are not registered in the right categories as well. So that's what differentiation, when you ask for the differentiation between someone who's claiming to be Sharia compliant, probably I think even if you whether you invest with the Sharia Portfolio Canada or not, but then it's a good practice always to check the registrations with the Ontario Securities Commission and registrations of their portfolio managers and financial advisors.
To actually add to Irfan's point, we are a leader in this space, and we're a trusted leader in this space, which is why you may actually come across other financial firms that offer Sharia compliant investments through our funds. And I mean, it's all about just researching the products that you are being offered, but you may notice that because
Yeah,
we
just
are
that reminds me, Zeeshan, that just to name, because I can take that name. Manulife, for example, are using our ETFs to create retirement products for the Muslims, and they are selling it to their Muslim employees retirement products in Canada. So we have structured those products, and if we are the sponsors of those products as well, or sister firm SP Funds.
I believe most robo-advisors around North America are using our ETFs. So, you know, whether you go to them or come directly to us, typically you're getting some of our products regardless. So when you come to us, you're kind of coming straight to the source. But, you know, if there are services that you need that only the non-Sharia banks offer, then you can still utilize our strategies by buying our funds through them. But by coming directly to us, you know, you're working with people who share your values. You know, when you're fasting, we're fasting. You know, when it's Salat time, we have to take a break and pray. And so I don't know, for me personally, I like working with people with the same values, but you know, you do have options out there. There's a question about being an employer contributed RRSP funds to an RRSP account with us. How long does it take to open an RRSP account and have it ready to invest? Sabinah, do you want to take this one? You're on mute.
Sorry. In regards to the employer contributed RSP, I think Zeeshan, that would be a question for you. I don't believe you can.
Yeah, so when it comes to an employer contributed RSP, typically it depends on each situation. So I would strongly suggest you do get in touch with us to discuss. But generally, if it's an employer contributed RSP fund, it's usually locked in and you cannot move that from its current custodian until or unless you actually leave that employer. If it is something that was formerly an employer contributed RSP, which is currently self-directed or managed by a fund like Manulife or Sun Life on a separate basis, that is usually possible to move out to another institution, but it depends on each situation. But to answer generally, yeah, it's usually locked in until you leave the employer.
Yeah, and then to actually open the account, if it is something that can be moved over to us, our client service team can work with you. It typically takes just a couple of days to open the account. Once the account is opened, you can, you know, work with your financial advisor and portfolio manager to kind of, you know, go over your financial goals and the strategy and model that you should be in. Once that is done, then we can go ahead and, you know, get your funds invested pretty quickly.
All right, there's another question. Can I reinvest Manulife lock RSP investment with you?
Yeah, I'm assuming this question is related to the first question, and the same answer really applies, but of course it depends on the specific situation. So I would, again, strongly suggest you to get in touch with us so that we can have that discussion. But in general, if it is a current employer contributed RRSP that is with the employer, you would not be able to transfer that out unless it is something that has been transferred out to a lira already. A lira is a locked-in retirement account.
Somebody asked about getting a copy of the recording. I just wanted to emphasize that we will post this on our website. So if you are not able to watch the whole thing, or if you want to share it with a friend, you should see it on our website. I'm not sure when it'll be updated. Maybe Ali Zaman can comment, but most likely later this week, it'll be posted, and you should be able to access it there. Does anyone have any other questions? All right, was there anything else, Irfan, Sabinah, Zeeshan, any of you would like to add before we conclude tonight?
Just,
Thank
thank you to everyone for joining today.
Yeah, no, thank you very much for everyone. And what I can say is, like, just to add up to Manulife, it's not only the Manulife in Canada, it's a Scotia, McLeod, and RBC, and some other funded banks, Western Bank actually, they use our ETFs to structure the products for some of their clients and some of their employees as well. Probably some of those products go into locked-in retirement accounts, but they slap another layer of fee there, and so essentially, it's always best to kind of touch base with our financial advisors to kind of understand something from the source where it's coming from.
All right, well, fantastic. So I thank Jazakallah for everyone that attended tonight and asked questions and got to know our team a little bit better. And thank you, Irfan, Sabinah, Zeeshan, for all joining and answering everyone's questions. And if you guys have any other questions or concerns or anything, please contact us anytime, ShariaPortfolio.ca. Thank you again for attending, and have a good evening. Assalamu alaikum.
Thank
Thank
you,
you,
everyone.
everyone.
Alaikum.